Howdy ho, everyone, and welcome aboard. It is Sunday. Thank you, Anita, for that little prompt. We are live all around the place, as I understand, social media as well. Big news in social media this week. I'm sure that we'll have something to say about that in the next hour or so, if we can get there. But welcome aboard to our weekly wander around the world as we trek the globe, so to speak, to get a taste of what our senior traders are thinking about the week ahead. We'll be off to New Zealand very, very shortly, but we won't leave the journey there. We will go then to the UK. We'll follow that by going to Malaysia, Singapore, El Salvador, believe it or not, the USA, and of course back to me here in Australia. It truly is an international event, this Sunday market update that we do each and every Sunday. Welcome aboard. Glad you could join us if you're here for the first time. Fasten your seatbelts. It should be a pretty fast-moving show, despite the fact that we've got electric cars these days. One person who does, I know, is about to talk to us from New Zealand. G'day, Jules. How are you, mate?
Hey Geoff, how are you? Indeed I do. I have two electric cars actually in the family. So welcome everybody, wherever you are in the world. As Geoff said, I am literally just in the process of strapping my seatbelt in because we're taking off. So we're going to start. We are indeed zooming off. Okay, folks. So why don't we get started with this? I'll hopefully just share my screen with you guys. So just bear with me for 2 seconds while I share it. So. Sometimes when I talk about these, the world in terms of how it's working, I think one of the things we have to bear in mind is for me, the granddaddy of it all, the most important market that I can ever follow in the world to try and get an understanding of what's happening, the way things are working, is the US Treasury bond market. And in particular, I like to focus on the two big yields at the end. So the 10-year yield, which is the one that often you hear people talking about, and also the 30-year yield. Well, today we're just going to look at the 10-year yield. Now, because of a quirk of my systems, and I have absolutely no idea why that's the case, they get the decimal place in the wrong point. So at the moment, for those of you that can't see, this chart on the left here is showing 1.557 is roughly where the 10-year yield is at the moment. So 1.55%. Well, that's quite interesting. Now, you're saying, Julian, well, why is it quite interesting? Well, we'll look at the technicals in 1 minute. The second reason for me why it's quite interesting beyond the technicals is that inflation is sitting there at 5 point something percent. And so when I talk about, and some of you have heard me talk about transitory inflation, there is inflation at the moment. I'm not denying there's inflation. What I'm saying is that I believe that the inflation that we're seeing right now is caused by some supply chain shortages, and is not caused by a fundamental shift to a much more higher inflation-based environment. So why am I saying that? Well, one of my key indicators for saying this is to look at the bond market. Yes, yields have been rising. I grant you they've been rising. In recent days, they've gone from 120. Recent weeks, they've gone from 120 to 155, but they still have a one handle in front of them. So why do I think that inflation is transitory at 5%? It's because having negative real yields in the bond market is quite unusual. In fact, having negative real yields of 3% is in fact incredibly unusual. So which is going to give? Are yields going to rise towards the inflation rate, or does the bond market know something that we don't? My bet is the bond market's rarely wrong. It normally gets this right about 90% of the time. I don't think this is one of those 10%ers, guys. So my prediction here is the rate of increase of inflation, so if you like the first derivative of the inflation rate, as we know has been falling dramatically, is going to cause the inflation rate to start to underperform fairly quickly in the course of the next few months. So it's going to be a rocky ride before then, but over the course of the next 3 or 4 months, I'm expecting to see those inflation numbers really start to turn back down again. So what's going to cause that to go wrong? Well, things that are going to cause it to go wrong are significantly higher energy prices, because energy prices are inflationary, but at the same time tough for the rest of the economy, because the prices of so many goods are dependent upon the price of oil. So if the price of oil continues to rally beyond the $85 mark and heads up towards 100, that is in the very short term inflationary, in the medium term deflationary. Okay, so that's a key message here. The higher the oil price, the more it has a hit on the economy. You can already see what's going on in the White House at the moment. Biden is encouraging everybody around the world to ship more oil, right? He wants the price to be stabilized, if not to be a little bit lower than where it is now. Helps his inflation numbers, helps him get re-elected, of course. Okay, so there's our thinking at the moment around the bond market. So one of the interesting things that I'd like to just point out here, maybe I can actually, hopefully, I hope we actually have this. Can I pull up I have the German Bund. So this is a week chart of the weekly chart of the German bond market. Now this is very interesting. Why is this interesting? Because here, right, yields are around about minus 50. So crazy, isn't it? 10-year yields are negative 50 basis points. Here they're about minus 10 to minus 12 basis points. Basis points, not interest, not percent, but basis points. It's 0.12%. Okay, so we're seeing here a major consolidation and potential trend shift. You saw the big drop in rally in prices here, which means a decline in yields. Then yields here haven't been able really to make much headway through that minus 50 basis points, and now they're coming back to break even again. Very interesting outlook. That to me looks to be turning a little bit more bearish, but for the time being, we still have negative yields in Europe, which is amazing, guys. So why does that matter? Well, let's go and look at our favorite currency pair of all time, which is the dollar index. Okay, I just want to highlight what's been going on through 2020, right? 2020 saw pretty much a bear market for the dollar. Now, why was that? Well, because the dollar was printing lots and lots of extra dollars that the Federal Reserve then used to give to the government. But in doing that, they had to buy bonds. You guys know about this QE, right? Okay, so they thought the world was awash with dollars, and then they missed out and they forgot about something really interesting, which is called the commodity price rally. So as the price of the US dollar stabilized around these levels in May. From about May was the point at which time there was a huge rally in commodities. There was some incidental specific rallies in commodities in this area here, but it really kicked into the energy complex from about April, May onwards. So why is the dollar rallying? Well, the dollar's rallying, guys, because if you paid $8 or $60 for your petrol 3 or 4 months ago, and now you're paying $85, don't you need an awful lot more dollars to do it? So the dollar is rallying because we are sucking dollars out of the system now. So think about this, right? As the price of oil goes up, this is crazy, the dollar will go up too. That isn't what's happened in the past, but that's what's happening now because the supply of dollars is too small. Isn't this crazy? Don't forget, still 80% of world trade is denominated in US dollars. That doesn't just mean the energy market. That means coal. That means natural gas. That means wheat. That means soybeans. All of those things denominated in US dollars. So if all of those markets are rallying and rallying hard, how many dollars are required? Well, the answer is an awful lot more. Right? And so when we look at what happened this week now on the dollar index, what happened this week, we have seen. How about this, guys? Let's just get a handle on this, right? So this was the ECB talk from Lagarde. Dollar falls, but then completely reverses the next day to close on a short-term high. Look at that naked close. That's the best close we've had for ages and ages, going all the way back over to here. Almost a month. Okay, this to me suggests that we've had a false breakout to the downside. We're now on a new dollar leg higher. So what does that suggest? The dollar's on its way to 95 or 96, most likely. So where does this project to? Well, at the very least, we could take the high here at 94.5, the low here at 93 and a bit, and we could then take that distance and add it on again, which gets us to about the 95.5. That's the reason why I came up with those numbers. We just target shooted that away. Okay, guys, that's really it for me. So I don't believe that inflation is permanent. I believe it's transitory. For those of you interested, there was a very interesting Fed article around that just a few days ago. And at the same time, right? Interest rates remain stubbornly low, which suggests to me that it is transitory, right? Because we always look at what the bond market's doing. The bond market knows best. It seems like your old grandmother, right? She always has the right line at the right time. Well, the US bond market is the great grandmother of the financial markets. Then we've seen now a reaction in US dollars where we're beginning to see the stresses and strains of higher prices in the commodities coming through to the market. They're simply unbelievable. An extra $4 or $5 trillion have flown into these markets, but there isn't enough to go round. Isn't that amazing? There isn't enough to go round to pay for all of these commodities that are being bought at these very high price levels. So therefore, there is a shortage of dollars, and the dollar will continue to trade higher as those commodity prices trade higher too. Geoff, that is it for me, guys. I hope you guys all get that, and I hope that's cool and you understand it.
Cheers, mate. Look, as much as I hate to admit it, it does look as though the US dollar is going to be a little bit strong for a little bit longer. But
not against the Aussie, though. We still like our Aussie trade, right?
Yep, still there. Look, Ainslie's not in today, so you've given a brief overview of oil. How about your stance on gold, if you don't mind?
Sure. Yeah. Why don't I have a quick look at that, guys? So, okay. So, I'll just park Geoff over there in the corner for a second, so you can all see my screen. Let's go have a look at what happened to gold. Well, look, I think the key thing about gold is let's start at the weekly chart, like I always like to, guys, just to get a feel for what's happening. So, big picture, what are we looking at with gold? Now, you guys who followed, anybody who listened into my show that Ainslie and I did, the Trader Cafe we did last week, where we looked at the fundamentals for gold and silver and also the technicals as well too, would know that we're both moderately bullish towards this currency. We still need to see that. The classic thing about being moderately bullish means that you're not wildly bullish. And why are you not wildly bullish? Because the market isn't wildly bullish. Okay, what we've got here, we still have this consolidation, but we don't think it's a bear market. We think it's a consolidation. We've got to try and get our way all the way through the month of November to about week 4 of November to then hit the seasonal bias where it starts to rally again, and we see that rally last through Q1. So key thing is here, can we hold the price levels we're at just for the next 3 or 4 weeks? So weekly chart, what are we looking like? Okay, we've got this big low down here at 1680. We then put a higher low in place here at 1720, and we have traded relatively well since then. Have we got above 1830? No, we haven't. A close on the weekly chart above 1830 would be a very powerful signal. Okay, looking at the dailies, what are we seeing on the dailies now? Okay, so here we go. Let's look at the dailies. So yet again, another struggly Friday that we saw, a struggly Friday. Hey guys, look, there's 2 bars down. I wonder what happened next. So a struggly Friday, but overall, the market is trying to grind its way higher. Where have we got key levels? Key resistance levels are here for me. We take out this price here, or we take out this price here. So 1810 to 1814, we get a close above those two, we are off and running. But as I said, it's going to be tricky because we've got to get through to the seasonal bullish time, which is in about 3 weeks, because everybody buys jewelry for Christmas. I don't think that's the real reason, but it sounds like a really good one, doesn't it, Geoff? So, because I know that you always buy your wife jewelry for Christmas, Geoff, and gold is your favorite color. And you're mute, so you can't talk back, which is even more awesome. So
I'll be more mute when Christmas comes, because there'll be no silver, there'll be no gold. There'll be a nice wet kiss on the chops and maybe breakfast in bed.
Well, as you know,
I'm a tight ass, you know.
Well, as you know, love trumps all, right? So
it does, mate.
Anyway, right, so here's the thing, guys. Let's just keep our bullish stance in this. Where are we wrong? Where are we wrong with our bullishness? So we start to head below 1750. Why do we have to head below here? Look at all this support level down here. Oh my God, crazy amount of support. All the way down here, right? We head below 1760, 1750. I think we've got a problem. I'd love to see us head just straight sideways from here on in. If we, again, another bullish point, medium term bullish, if we break even 1800 now, right? We break 1800, the bull trend remains intact. One of the things I recommend you do is look at some of the associated markets as well too. So if we looked at silver and see what's happening to silver, oh my God, how about a bull trend there, right? So about the same time as gold went down and bounced, look at what happened to silver. Silver had a false breakout to the downside. It came back inside this big trading range, hung around for about 5 or 6 days and then took off. There we go. Look, breaching these two highs very easily, closed above it. Oh, look, 2 bars down. That's interesting. Oh, look, 2 bars down. That's interesting. Okay, then we had the big run up. For those of you who've just been watching the last show, you'll understand why I was saying that, right? And then now we've just gone into a small consolidation, but doesn't that chart look a lot more aggressive than the gold chart? Okay, so just bear this in mind, right? All the ancillary charts around it, nothing is bearish in there. The only thing that bothers me, okay, is this chart. This is the junior miners. I think what happened is everybody got so excited buying gold miners, right? So if you look at this, they went from 38 to 45, which is $7, $7.38. I don't know what that is, but that's roughly 20% to me. That's an insane amount, right? Okay, so all that's happened is we've come back a little bit, right, to try and stop those people out of their very long positions they've all acquired up here. The market went crazy for a few days, right? So just bear in mind that, you know, within the gold, the actual gold miners themselves are trading a bit rough, and this is the seniors, so they've come back a bit too. Again, looking for some kind of bounce in here. We just need to make our way through to the end of November. If we take out this low here, 29, then all bets are off. But until that point in time, I think the gold miners are still looking good. And don't forget, they are way cheaper than they were before the last gold bull run. Geoff, how about that?
Mate, awesome. Thank you so much. There's a there's a cricket World Cup going on at the moment. How's your analysis on that?
The great news is that, as you know, I'm English, but unfortunately being English doesn't always qualify me to be an expert on cricket. The good news is I think I gave up cricket when I was 14 years old when I couldn't work out which end of the bat to hold.
Mate,
so,
welcome the Australians at the moment.
and
Certainly
the black
not
caps,
against your expats.
Well, yeah, the black caps don't seem to be that good either, I don't think. So I don't know. We're going to see. Pakistan look to be the team in form at the moment. We'll see how they go.
Yeah.
And yeah, they look pretty hot at the moment. So good luck with those guys. They're due a really big win. So hopefully they'll come through. But who knows? Sport is sport. We got a long way to go. We're not even close to the playoffs yet. So anyway. Does that help? That's my cricket. That's my cricket analysis.
I think you're spot on the money with. I think the sentimental favourites have certainly got to be Pakistan because couldn't they do with a lift? Absolutely.
Cool.
Very
Thanks,
much so.
guys.
Thank you, mate. Your overtime check is in the mail, as you know, and we'll catch up with you next Sunday, of course. Happy days. All right, we go from New Zealand now. Normally we would go to Ash, but I think Ash is like a lot of our presenters this week end in IFP, and he can't join us. He did attempt to give us a video a little bit earlier, but I think the technical difficulty with that has now surfaced, and we've got a problem. So we'll go straight on to what I think is probably one of the news events of the week, and that, of course, is the changing of the guard or the brand change. And the big news in social media this week, of course, is with that massive brand change. And I believe our resident crypto king has a smile on his dial. Here's Shukri.
Guys, what a day. Not necessarily for Bitcoin. It went up again after the options expired. Just struggling here a bit, but if it clears here, looks like we got a clear run to around 80 or 85K, and Ethereum is also holding up. In fact, I would say much better than Bitcoin here. It has set a new high but it looks like it really wants to break out and realize its dream of trying to flip Bitcoin, but that's not the big story. The big story is the metaverse. So Facebook has really put a shot in an arm for all metaverses. Look at how they've gone nuts. Decentraland Mana, this is probably the premier, the oldest, the OGs of all the metaverse, and it's doing an XC. Look at that, it's just doing an XC. Let's go to some familiar faces here. Red Fox, right? We were kind of discussing this, okay? At around 5 cents, it's now 19 cents. Warrena is doing very well too, for those of you that got the IDO. But guys, can you just not commit too many sins? Because Sin City, oh my God, those who did get the IDO, it's almost a 20x. Okay, so I think you're going to see this huge movement into metaverses. Let's see what's happened next week and the progress on Facebook. Look at Flow, even Flow, which was dumped to like $12, $11 after the massive unlock, is also pumping. That's it for this week, guys. Goodbye and see you guys next.
Okay, there he goes, the goat, the goat of crypto. Most certainly, he's amazing, that guy. And yes, you do interpret it, as I have to admit. But look, if you've been following Shukri for the last goodness knows however, we've had him on the shows, you would be doing extremely well in your accounts. Yes, it's hard to follow, certainly for an old chap like me. However, it is what it is. We're going now to Singapore, where we will talk to Lloyd in just a tick. And to my mind, you know, he's the hardest working trader that I've met, really. He's up next with his weekly look at what he does best, and it's the currency indexes. G'day, Lloyd.
Good evening, everyone. We'll jump straight into the currency index analysis. The first up off the bat is actually the dollar index. Yeah, last week I was actually pretty bearish about it. In fact, I wasn't really entirely sure. But this week, looking at what the formation is, pretty happy to see that for the dollar index, price has in fact broken the horizontal level and make a very nice retest. Yeah. So if we look at the immediate term from May to now, it looks as if it's forming a very nice uptrend already. Yeah. So higher high, higher low, higher high, higher low. So as such, for this upcoming week, I'm pretty bullish about the DXY. Yeah, looking forward to see if any dollar long trades that will be setting itself up. Next up my list is actually the Canadian index. Now price has remained above the $80 level. In fact, for a weekly chart, it has formed a very nice doji bar. Yeah, but I wouldn't straight away jump into this any cat setup. Probably after Tuesday onwards, when I see that there's some clarity when the bulls have comes in, yeah, to actually close above the doji, then I'll be much more willing to trade it long. Next up my list is actually the Australian index. Now this also, I'm not entirely sure, but it does have a very nice setup that it might possibly bounce off this horizontal level. You can see that this is where price previously bounced off. So from Aussie onwards, actually, I can't say that this is directly bullish or bearish, but I would say that there's a possibility that price might actually be bouncing off this horizontal level. Again, pending a Monday bar to see if the best comes in. If it does, then we might be possibly in for a very nice bear run. Now, Kiwi officially, this has been pretty tough for me to trade for the past 3 weeks. So, and if you look at a bigger picture, this looks almost as if it's in a range. So I'll just leave this out. Again, pound, there looks to be forming a pretty nice looking downtrend. Yeah, but it's really in the middle of nowhere. So I'll be looking for bearish opportunity for pound, but it won't be really at the top of my list for trading. Now yen. So what happens now? You can see that this is a very strong horizontal level, $88, and price has recently just made a very nice break and retest. Now on the retest bar, it isn't a very strong retest bar. In fact, it forms a doji. Yeah, so I need to wait for a Monday close to see if the bears are in control. If it does, then I will be likely shorting yen throughout the whole week. Now Swiss, I've been saying this for a few weeks already, that price is coming back up to the top of the channel and horizontal level and might possibly be making a very nice rejection. Now price in fact didn't actually touch the channel or horizontal level, but I'll be preparing to actually make a short trade already. Yeah, this is this particular trade has been weeks in the making. Yeah, so pending on Monday close, I'll be very, very keen to make a short Swiss. Shorting the Swiss, not short Swiss. And the last on my list is actually the euro. So of all this is the clearest indication that it is a bearish movement. So again, price make a break, not a very nice retest. I can actually possibly adjust this horizontal level, but what I like about this particular trade is that from April onwards, you can see that this is a very nice downtrend already. And in fact, the current price action that formed is actually an engulfing high test bar. Yeah, so personally to me, this is one of the strongest price action signals to trade. As such, from the upcoming week ahead, the two trading setups that I'm looking for is actually euro dollar shots. So I'm waiting patiently for price to do the same thing, break and retest of a horizontal level. So there are two areas where I'm looking for a trading setup. And the next on my list is actually CAT Swiss. Yeah. So you can see that CAT Swiss on the H4, it has been making a very nice uptrend, then followed by a pretty deep retracement. Yeah. So this may very well be turned into a short trade, a downtrend in fact. But let's not rush the gun. Yeah. So what I'm patiently waiting for is for again price to actually break to the high side, retest the horizontal level before I make any movement. Yeah. So that's my analysis for the week, and these are the two charts that I'll be keeping a close watch on. Thank you for joining me, and I'll see you next week.
Cheers, Lloyd. Thank you very much, mate. Not so sure about the second, but certainly I'm on board with the first. I think it does look extremely bearish and is in strife, it would appear. Timing is everything, of course. We will wait to see if we can find an entry on that. Okay, now we're going to El Salvador, believe it or not, where they adopted crypto as their legal tender. They also adopted a slow-walking, smooth-talking Orlando as their US dollar expert. We've spoken a lot about the US dollar, but don't adjust your base levels. Here's the big O.
Here, let's talk about the US dollar and what we're going to do next week. So, by the end of New York trading on Friday, we saw a surge in buyers on the USD, on the DXY, right? Now, this is insanely important because let's go to the weekly chart, right? Let's go to the weekly chart. If you notice, this level, the 93.10 to 93 level, has been a massive base in the past and a pivotal level in the past too, right? And right now, the DXY closed really above that level. Now, let's go to the 4-hour chart and let's have a look at what's going on here. Now, there's absolutely no setup to buy or sell the US dollar at the moment. But if we go to the daily, right, if we go to the daily chart, and let me just, right, if you go to the daily chart, what I'm waiting for is an open above these highs, above Friday's highs, I think, above the 94.60 level, which will trigger buying on the USD. Now, where will I play this USD long? Well, let's have a look at the GBP USD. The pound has been crazy strong since it bottomed on September 30th about at about the 134 level, right? But if you notice, this daily candle on the pound is extremely bearish. It has engulfed the last 1, 2, 3, 4, 5, the last 10 daily candles. So let's go to the 4-hour chart again, and what I'm waiting for is this, right? An open. So for Sunday's open is going to be really fun if the pound versus the USD opens at the same level, right? And if it opens a little bit higher, around the 137.20 or so, it's going to be even more yummy in the sense that it's going to be testing those lows, right? The lows that it broke with late on New York, on Friday's New York trading. So I'm looking for sales at around the 137.25 to 137.20 on the pound versus the USD, just because we have a potential of at least a 2-hour trade on Sunday's open. If we look at the Aussie USD, the Aussie USD is a little bit different, right? In the sense that it closed a little bit bullish on Friday. So if the US dollar continues to rally, as we saw on the daily, weekly, and 4-hour chart, sales on the Aussie would be triggered for me at least around the 74.70 level. Let's have a look at the Kiwi. Now the Kiwi, it's actually even more bullish than the Aussie. So on the Kiwi, there's absolutely no setup for me to play this US dollar strength that I am waiting for on Sunday's open. But let's finish up by looking at the Euro US dollar. So the Euro USD, this is a 4-hour chart on the Euro USD, right? Completely bearish at the end of Friday's trading. But let's have a look at the daily, just to look at some levels. Actually, we need to look at the weekly, right? Just to look at some levels, right? And, this is the reason that I wouldn't play US dollar strength on the Euro US dollar on a short position, just because of how massive this level is. What the 115, let's call it the 115.50 or so, right? This is a massive level on the Euro US dollar. So my preferred market to play a possible US dollar strength still is on the pound US dollar.
I can assure you that that Orlando was not on Valium whilst he was doing that. I think the recording was just playing a little bit fast, if you like. And I know that's paradoxical, but as it plays fast, it sounds slow. If you get my drift, at least it did when I used to be in that sort of game. Anyway, that's a long time ago. We now are going to cross to the US of A, speaking about the US dollar, and one of the world's most respected market analysts. Listen up, folks. Big good day to Gordon Scott.
Hello, everyone. I'm here to tell you about how the week is shaping up in U.S. stocks and also in a few currency ideas. I want to share some charts with you. Let's get right to it. The first one I want to start with is a sector comparison of the S&P 500 sectors. And what we're seeing here is energy and finance and discretionary are all three on top here, right? But you see how energy is sort of flattening out and finance is sort of flattening out. We got discretionary charging up strongly, and coming right behind it is technology. So I want to show you something interesting about several of the technology stocks, U.S. technology stocks. All right, so here's the Netflix chart. We've got a red line for resistance, and what is Netflix doing? It's breaking out of it over the past week. How about Google? Well, breaking out of resistance. Microsoft, breaking out of resistance strongly. Overall, all the Qs, the NASDAQ 100, breaking just the past couple of days. Home Depot, it broke out a couple of weeks ago. It is way above the line. Tesla, Big breakout just in the past 6 sessions. ExxonMobil breaking above. Overall SPY, overall DIA. Are you sensing a theme here? A little bit of the move going on Bank of America and also on NVIDIA. Look at all of those. See, now those are about a third to a little more than a third of the top 25 most influential stocks. Meanwhile, check out these 3 stocks. Walmart, Duke Power, Next Era Energy. You see how all 3 of these are not getting above resistance. They're hitting resistance and coming back down below it. What that is telling us is these are defensive stocks. This is where scared money goes to hide. Those other stocks, those are growth stocks. That's where aggressive, confident money goes to grow. And so you look at these and what we see is a pattern of money flowing towards growth and money not flowing as fast to the defensive stocks. That is usually a very strongly bullish sign. I think it means the market's going to go up the rest of the year. And so here we are coming into the fourth quarter. A lot of the earnings, all the big earnings are out now, and the news was good for most of them. I mean, there's some that had sort of mixed results, but generally speaking, it was all good news, and some were really surprising. So from here on out, people are going to aggressively and confidently put money where they think it's going to grow. And that's the pattern we're seeing. All right, except there's one exception to this rule, Apple. Look at the chart of Apple. What is going on here? Apple is one of these technology stocks. It's the leader of these technology stocks. It's really growing out there. There's actually not only one exception. Amazon looks similar to this too, but Amazon's more of a discretionary spend than it is a technology sector play. But meanwhile, Apple. Think about Apple here for a second. It's 20% all by itself of the technology sector. It's one of the 2 most influential stocks. It combined with Microsoft. The 2 of them, wherever they're going together, that's where the rest of the market's going. Look, Microsoft is doing that. Apple is doing that. Huge disconnect. Something's got to give. Either the rest of the market's going to come back down, that's doubtful, or Apple has a big opportunity to run up. I think that's more likely. That's why I think the stock to watch and to play in the coming week is Apple. So if Apple's going to grow, and if the U.S. stock market is going to continue to grow and have that opportunity, then what's the next possible play? Well, let's see if I can bring up this. How about the AUD JPY, which is 75% correlated with the NASDAQ? And what has happened on the Aussie yen during this same week? Well, a breakout, right? Up we go. Now, last week I had said I thought the Aussie US dollar was going to be a good opportunity. It might dip, but it could go stronger and make a new high. And as you can see, it wasn't as exciting as I thought it might be, but it did follow that pattern. Sort of dipped and then came up. On Friday, it went down. Good chance that is going to continue. And the question is, will it outpace the euro and therefore keep the euro trending lower? I think the answer is yes. If you look at what happened, the Aussie US dollar went down a little bit, but the euro US dollar went down a lot, right? So therefore the euro AUD pair went down even more, continuing that big downward trend. So going long the Aussie dollar and short the euro is probably still a good play for the coming week. But the Aussie yen is also looking good. And then one other one, USD JPY. If the yen is going to weaken because technology and growth stocks are of interest, and if the dollar is not going to weaken, I mean, have a look really quick here, DXY, the dollar index. For all the talk about inflation, the dollar strengthened I think that's because people are expecting interest rates to rise. In fact, we know it is just by looking at this stock, SCHW. This is Charles Schwab. Their business is built to make more profit when interest rates rise. As you can see, they've also had a breakout, but more important, they've just kind of been on the rise for the past 2 or 3 weeks. As inflation news keeps heating up, people feel like, hey, the Fed's going to have to raise rates at some point, and when they do, Schwab's going to benefit from it. So if Schwab is going up, it's because investors expect U.S. interest rates to rise, which also explains then why the dollar index is also moving higher, because people expect U.S. interest rates to rise sometime in the not too distant future. So if you've got the dollar going up because of expectations for interest, then and you've got technology strengthening in the U.S., then it's only going to be natural that USD JPY, which had a very strong breakout, holding into a sideways pattern, at some point it breaks this pattern right here. And if it does, then you've got a big potential move going this way. If it breaks the lower side, then you got all this way back down to here. So the real question is, how much of a trade, how much risk would you have to take in order to get in this trade? So like 113.72, if you bought it going long at that low rate, you could put your stop there at 113.15. That's going to be about 60 pips. So if you could pick up a trade that would only require you to take 60 pips risk, but it also had the opportunity of giving you about 130, 150 pip move in either one of these directions, and there was about a 50-50 either way, that's a trade you'd like. So I like the idea of the USD JPY trade on trying to play this breakout. You could probably do it even better in a 4-hour chart, but that's the setup. So markets are looking pretty good either way for growth with U.S. stocks or big opportunities that dollar strength is going to create in the currency markets.
Awesome, Gordon. Thank you for that. Guys, you may have guessed that a lot of our presenters today are coming to us as recordings, and the reason for that is that Actions to Wealth has a major event on this weekend, and that's just about wrapping up as we speak, and all the presenters in that are exhausted, as I understand it. I'm sure they're headed for a beer, some of them anyway. Look, my turn. So we're back to Australia, and right at the bottom of Australia, I might add, in Tasmania, where I'm showing you my EuroCAD monthly chart. The reason I'm doing that is to give you a reasonable picture of what is exactly going on here. And I think the clues are, if you like, Brexit area through here. Tried to break through that high, can't do it, and eventually has fallen. No surprise there, given the currency that it is trading against. It has pretty good, to my mind anyway, fundamental numbers around it, and certainly the oil price is giving that a bit of a piggyback as well. So this chart looks to me like phase one, consolidate, phase two. What happens next is interesting, of course, but I think, as I said last week, I think it was last week or the week before, any rally on this, to my mind, is a sell. In particular, of course, if you come to a resistance level. It is on my charts of interest this week because it is a game changer bar, or what I call a game changer bar. And we've had quite a few of those of recent times. What they are is pointers in the direction that we suspect, or I suspect, the market is going to move next, and that is one such thing. To trade at the bottom of that bar on a daily chart doesn't make that much sense to me, but a pullback and anything that gives me, as I said before, a resistance area, then I would look to trade that short, that EuroCAD. Also on the list of game changer bars is euro US dollar. I don't think there's anybody that's presented today that's in favor of the euro versus the dollar, and I can certainly understand why that would be the case. The problem, of course, is that you're entering at a support level if you were to enter below that bar, and I'm not a fan of that. That's the daily bar, but the weekly bar is, to my mind, quite emphatic, and it has rejected not only the resistance trend line, hasn't quite made it to what is pretty much a cloud of a price anyway, in this 117.30 as I've got it there as my resistance level. But the confluence here of last month, I can speak that way now, because by the time the market opens tomorrow, it will be last month. That monthly pivot has been unable to be cracked, if you like, to the high side. There's a confluence of that trend line and the monthly pivot. It's also broken, to my mind, again, the I guess most recent support level. When I'm talking about recent, I'm going back 1 year pretty much, and it's retested that level as well. So I've got no reason to suspect this will go anywhere but short. And for that reason, I am a massive bear and looking for entries. As I said before, if you traded that daily bar, I think it's a little bit dangerous. There will be pullback, but if you've got your stops up here, I think you'd be relatively safe. I will probably be waiting for a better entry than is there. And if it comes back into, say, this area here, I think I'd be really, really interested in getting into euro dollar short. Pound US dollar is in very much the same vein, in my humble opinion. It's also giving me a game changer bar. It's very, very difficult to see there with the pivots. But if you look at the descending channel that we've adopted here, or I've adopted here, and we've had a rejection bar of the top of that range. We've had a second rejection bar of the top of that range, and that looks extremely bearish to me. I think that's a potential trade if you want to trade that on the weekly chart. Monthly pivot won't be there tomorrow. It will probably be, if I draw a line through what's happened during the month, in this vicinity, I would expect. So that's going to make it tough to trade into. But again, a break and a retest of that, or indeed get back up here, a lower high based on this double top here, I think is interesting as well. That may well be a case to consider going into the week. Pound US dollar. I think you're getting the picture that most of us are pretty bullish the US dollar at the moment. Don't like saying that, but it really does look I won't say a fait accompli, but it's pretty much there. The next one I'm going to show you, the next three I'm going to show you are far more interesting than the last three. And the reason for that is that they're setting up what I really do like to see. I've shown you three what I call game changer bars. They're actually key reversal bars. And when they're coupled with an inside bar, they are very, very powerful. I don't really like this one, to be honest. And the reason for that is the body of the bar is far, far greater than I would like to see an inside bar. Indeed, the entire range of the bar is much, much more than I would like to see. I'd much rather see a tiny little bar in here. That would convince me that price is ready to go short. That said, we are, if you like my little range there, I call an ascending channel a range. We're really looking at a potential false break of the high of that. And that it does attract my interest, but the candle itself does not. So I'm kind of going down to the smaller time frames. We've got a clear double top here, got a little bounce off the weekly pivot of last week. So I think a lower high in here does get me interested in this one. Aussie Swiss short. Now, I know we're all bullish the Aussie, but against this particular currency, which has shown strength, technically, if I see a lower high here, I think I'm going to have to trade it down to here. Any time frame, 4 hours and above would do. Aussie yen not dissimilar, probably a little bit short of being good, if you understand what I'm saying. The reason I say that is I think this channel is pointing us towards this confluence area here around about the 87.56 mark. It's a cloud of a price, of course, but there is a confluence here at the top of that channel, and I expect that price will get to that level. The problem I've got is, well, it's not really a problem. It's just a signal to me that price will retrace before it goes there, because it's got ample opportunity, in my humble, to bounce off that level and maybe even continue to range in here before it goes there. So I'm of the opinion that for whatever reason, there may be some Aussie weakness. And guess what? We've got an interest rate or an RBA statement coming up on Tuesday that may well be the reason that the Aussie comes off a little bit before it goes to that level. I'll be waiting for that to happen, frankly. And if I see an opportunity to trade it, maybe short before I go long, would be the way I'd want to go. Kiwi Swissy is the last of them, and very, very similar to the last two I showed you. We've got a game changer bar, what I call a game changer bar, followed by an inside bar there on the weekly chart. That always gets me interested. We are at a resistance level. The worst part about this is that we've got to close above the trend line on the second of these high test bars. Don't think that would really give me reason to be concerned unless we get, I'll go back to that chart, sorry, unless we get a close above the horizontal level, which is, as I said, a little bit of a cloud of a price. It may well be the 66 mark, but it's somewhere between 65 and 66, there's no question. It does look like a little bit of a failure at that level. And I'm watching it closely, but I can't trade it just yet. I will wait till I see a breakdown of resistance. What that means to me is try a break of that trend line, maybe try a break of the horizontal line, and then get back under it, retest it. Then I can look to trade it short. So a few opportunities there, I think, from my point of view, and maybe you can trade a few of them, as I said, first up. But in the meantime, you probably need to wait just a little bit until those retracements take place, or you hit those resistance levels. A couple there, though, I think you can probably trade on Monday morning if there's no big gaps in the market. Okay, that is the show for the week. We have had our little trek around the world, and all the opinions that you've had, of course, from experienced traders, senior traders in the Actions to Wealth group, and we hope you've gained something from them and can actually adopt those thought processes into your trading for the coming week. Just make your decisions good ones and trade well. We look forward to your company. Thank you very much, Anita, for playing all those recordings that we had today. It'll be nice to have the crew back live in Sunday Market Update next week. Thanks for being part of our day, and have a great week ahead. Bye-bye for now.